So I'll start off today's video a little differently. Let's play a game. And this game is called Guess the Stock with me. Without giving you too much hints, I'm just going to reveal 3 different line items to you and you tell me which stock we're talking about. So from the August quarter of 2019, that's roughly 6 full years ago, the top line revenue of this company sits at roughly 8.2 billion US dollars. And 6 years later, it went to 17.6 billion. Moving on to its gross profit, 6 years ago at 7 billion US dollars. Today, it's at roughly 15.7 billion. And on an operating profit basis, it went from 2.3 billion in 2019 to 6.45 billion in 2025. Now, take a moment, scroll down to the comment section and leave in your best guess. No cheating, and press the like button on your way there. This video is in collaboration with Moomoo Singapore. More about them later on. To just really ground you in terms of the level of growth rate that we are talking about, looking at the top line revenue growth rate in the last 6 years, the company essentially 2.15x. All the growth on the top line in revenue flowed through to the gross profit. And in fact, the gross profit margin has improved over the last 6 years, from 85% in 2019 to 89% in the latest quarter. And more importantly, on an operating profit basis, it essentially 2.8x, flexing some levels of operating leverage. And without further ado, to reveal the company to you, it's none other than Adobe. So why are we talking about Adobe? For one, I think if you did the comparison over that 6-year time horizon, the stock price essentially went flat. In 12th of July 2019, they were trading at roughly $310 per share. Today, Adobe is still trading roughly in that range. But if you're to actually pull out the stock chart, yes, Adobe has been a great compounder, but it has lost its magical powers in the last 6 years. And in this video, we're going to investigate why. And not only that, it has been an absolute disastrous year for Adobe, where it's ranked 473 out of 500 companies in the S&P 500, clocking in roughly a negative 27% year to date. In the last 5 years, companies were compounding upwards, Adobe was compounding downwards. Now, why is Adobe on my radar? I'm not too sure about you, but I'm starting to see a lot of such posts coming up onto my X timeline. And the long and short of it, they're basically saying that Adobe is trading at one of its lowest PE multiple ever, and the market is treating Adobe like a terminally declining business. So are markets the ones irrational, or Adobe investors? And for any of you that wants a quick overview of any company listed on the major exchanges, all you have to do is to log into Moomoo's app, and all these data points are at your fingertips. In fact, just to give you a bit of a teaser, you can look at their most recent earnings estimates, some of the ratings consensus amongst Wall Street analysts, and even the historical valuation matrix, such as price to book or even price to earnings. And likewise, I think to concur with many of these different tweets that went out, clearly Adobe is really trading at one of its historical lows. And just to give you a quick walkthrough in terms of how to navigate the application itself, so you can sign up for an account with the link below, get your exclusive welcome bonuses, log into the account, and just key in any company's stock ticker or the stock name itself in the search bar at the top hand corner. In this case, let's talk about Adobe. You'll be greeted by this page. You scroll to the right, you go under the company section, and you can scroll through the different things. And one important life hack that I've recently came across is this Morningstar research, where they essentially integrate, I think at the back end, some APIs to access some of this data from Morningstar, which is one of the reputable data provider, and they do churn out a lot of these so-called investment research and investment reports. So you can see me basically scrolling through the different investment case of Adobe. What should a new investor be looking out for? A very quick overview of what the bulls and bears say. In fact, you can even access the entire full report from Morningstar in the Moomoo app itself. So if you're new to Moomoo Singapore, here's how you close the year off with a bang. So with my link below, a 5,000 Singapore dollars initial deposit gets you an exclusive extra $60 Nvidia shares on top of the standard $40 of Nvidia and $60 worth of trading cash coupon. And in total, that's 160 Singapore dollars worth of value right out of the gate. So Moomoo Singapore is a MAS licensed broker, and they're running a limited time welcome promotion from now until the 8th of January 2026, with rewards tiered all the way up to 1,315 Singapore dollars. Plus, you get to enjoy other welcome goodies like $0 commission, options trading gifts, and even a chance to win a gold bar when you link your CDP account with your Moomoo account today. Now, if you're worried that you didn't register correctly through the link, don't fret. After downloading the Moomoo app, you just have to log in, search for special deposit, and tap go, and you enter my code CK88 to lock in the additional exclusive rewards today. So don't sit on this. Get your accounts set up, claim the bonuses, and put your money to work today. And I believe the debate of how you look at Adobe today depends on which lens you're undertaking, whether you are looking at it from a historical lens or whether you are looking out into the future. So on the bullish front, here are the few main pointers argued by the bulls. Adobe has been and seems like they will continue to be mission critical to design workflows and processes with an extremely sticky franchise with recurring revenue. And not forgetting that they do have the PDF file reader and also the suite of Adobe Creative products or Creative Cloud that includes Photoshop, Premiere Pro, and things like that. And they definitely have elite unit economics and a balance sheet as a software as a service business. So they have high operating margins. You look at it historically speaking, they have high ROIC, great free cash flow margins, and they are also actively buying back their shares. They are also used to easily justify their market premium multiple with their very strong economic moat. You can think of factors such as high barriers to entry, the network effects, switching costs, and brand equity. And I think the most important thing, sometimes often underappreciated, is how much of a monopoly in the design industry Adobe has. And for those of you who do dabble in the design industry, and usually having skill sets in Adobe Premiere Pro is a given. You are expected to have the capacity to navigate and work around their suite of products. Without it, you probably cannot call yourself a designer. And in fact, today, Adobe is trading at a very, very steep discount compared to its past. And if they can continue to sustain at least a low double-digit growth rate on top line, and it flows down or flows through to the bottom line, regardless of which valuation models you use, I think they are considered undervalued. No doubts about it. And if the market suddenly wakes up and agree with that multiple, then not only do you have the earnings continue compounding at that growth rate, more importantly, you have the second twin engine where you experience that re-rating of trading multiples as well, which you have seen has essentially collapsed over the last 5 to 10 years. Why Adobe has went down by so much is really about this two-letter word, AI. It's about AI, and even more AI. I think most software-related companies have all seen their moat and status being challenged with lowered valuation multiple. You can think of companies like Constellation, CRM, which is Salesforce, and so on and so forth. All these software companies are all taken to the back and short. And regardless of whether AI has a true impact or not, putting that aside, the growth rates for Adobe has really significantly slowed down to now low teens from the pre-historical 20-25% rate. And to make things worse, Adobe is constantly under siege from intensifying competitive pressures. Initially, it used to just be Canva and Figma, but now every other AI tools out there is also trying to disrupt the design industry. And the sentiments around the future of Adobe is weighing extremely heavily on the stock today. Now, before I go into the different arguments arguing for or against Adobe, let me just share a little bit more in terms of my own personal experience. So this is not my first rodeo with Adobe actually. Previously, I was a shareholder back in 2023, 2024. And as you can see, this is my trade log. I have actually been averaging up on Adobe up until April of this year. But I did make the decision in mid of this year to basically sell out of my entire Adobe position. And the entire justification is pretty simple. Because Adobe was not the only company in my portfolio back then that was under siege by a lot of all these AI concerns. And one of the front runners of the bigger problematic child in this agentic era is also Google. So that's why I kind of thought that I should just consolidate all my position since both of them were suffering from this agentic attack. I might as well just sell everything related to all these software companies and just consolidate to Google. And in hindsight, of course, that was a superb decision. But that said, I'm not totally foreign to the investment idea of Adobe, and I'll share with you based on my initial research and what's my updated thoughts around the company today. So first things first, I think especially for investors that are not necessarily even remotely interested in the design space, I think like any skill set in the world, it's always a spectrum. And in the design sphere, we cannot disregard the fact that there are a huge swath of people that are of varying degrees of expertise or skill level. And in this case, I think it has been a very long drawn bear thesis around Adobe that Canva is out there to steal their lunch. They have been there growing their user base by a very, very significant pace, even compared to Adobe. But personally, when I initiated the position back then, while studying the company and the competitive dynamics and things like that, it was quite clear to me that both of them were operating in very, very separate and distinct markets. Even though, yes, it is under the category of design in general, whether is it to make infographics, and more importantly, even to edit photos. Some people even bring it up to Canva because they have very simple toggling effects, are much easier to navigate than Photoshop. But the clear distinction is this: Canva is really for the beginners and people that don't really wish to build a career in the designing space, while Adobe, on the other hand, is really operating at the professional level. And not only that, I still remember very vividly a few years ago that Canva was out to kill Adobe. It was dubbed as the Adobe killer. Number one, from a price point perspective, it is close to, I think, 5 or 10 times cheaper when they first launched. They can roughly achieve 80% of what the pro users want at a fraction of the cost. But I think one very often missed out fact is that the era of content creation has boosted the demand for simple designing tools by a very large extent. And by the way, full disclosure, personally for myself, I am operating a small side hustle on YouTube, and a lot of the things that I do is actually designed on Canva. And yes, I am a paying user of Canva. I do pay, I remember, 100 or 200 bucks per year, and compared to Adobe, that's a fraction of the cost. But that does not take away from what the real professionals in the design industry need, which is control and precision. Canva, on a very, very broad sense, can achieve a large majority of what Adobe can do. And it's really just that last 10-20% of tweaking that gives the design style and achieve particular objectives of organizations. And that enterprise grade or enterprise level need for control is something that I believe Canva, even until today, can never replace. And as to kind of summarize why Adobe really has that level of stickiness, and to emphasize kind of what is their economic moat here, there is this very interesting Reddit reply, and he is someone that works professionally with video and photo editing. And he said that, I could technically do most of what I do with free softwares, but there are so many small refinements and workflow optimizations in paid software that I would save more money and time by paying. I also feel like I'm less of a technician and more of a creator with most paid professional software. Some things are easier to do fast. So I'm not a fan of using Premiere Pro for video editing though, and I think DaVinci Resolve is generally much better. But Premiere Pro still have a lot of workflow integrations that are basically unique. And one thing is the program itself, another is the plugins and the tools that integrate better with server-based production. Lastly, I also find that open source softwares is less optimized for the hardware that professional creators usually use. And one such example is Darktable versus Lightroom. Going through large collections of images simply feels much snappier in Lightroom. And also, just to kind of draw back the distinction here, is that not forgetting the fact that I am operating a much more smaller one-man media house, sometimes outsourced to so-called freelance video editor or thumbnail designers. But comparing to somebody that is operating at a much higher level with a lot more overheads and a lot more coordination across a bigger team, he or she probably will be locked into the entire ecosystem because it's so much more painful to switch out, to find a new workflow, and to optimize again across different people. And just to share, another fellow YouTuber, he actually sent me his own screenshot of Adobe's suite of products. And yes, you can see that across the last 3 years, from 23 to 2025, Adobe has jacked up their price from $800 to $1,000. And his reply to me was that, too bad, I just have to suck it up, buttercup. And he really don't see the need or even the benefit to jump over to an alternative. So that kind of explains the depth of the moat itself. And to also share a little bit more in terms of how Adobe is kind of interacting and navigating this entire AI landscape today, Monopoly Capital actually tweeted out why the market is slightly wrong about Adobe. So roughly 70 to 80% of the revenue comes from professionals. These people use Adobe daily because it is their livelihood and everything needs to be perfect. So they will not cancel their subscriptions. And only the hobbyist portion of the revenue is truly high risk. Professional work requires precise edits and formatting that raw AI models cannot execute, and Adobe owns the finishing touches. So AI features are also being integrated into the platform rather than fighting off. So Google Gemini, Runway, and other models are being embedded directly into Adobe's ecosystem. And Firefly is also trained on more than 350 million licensed Adobe Stock images, unlike Midjourney, which is an open model. So enterprises cannot risk using models trained on scraped data. And Adobe eliminates the risk and offers an uncapped legal guarantee to enterprise clients. So Adobe is also seeing more files exported rather than fewer. And AI allows designers to generate 100 variations in the time it took to do one. And this increased the usage and stickiness of the tool, which justifies future price increases. And it is really not just about the software, but it is really about the pipeline. So large agencies have built terabytes of automated workflows, scripts, and asset management systems specifically around Adobe's file formats. So I believe there are 4 key factors that he's arguing here. Firstly, Adobe is built for professionals, and professionals don't seem to be disrupted by all these different AI creations. In fact, I would dare argue that a lot of all these AI-related or AI-assisted tools are closer to kind of disrupt Canva, which is on the lower side of the spectrum for beginners rather than professionals. Second point is on AI integration. Third point is about legal guarantee. And the last point is the entire integration of workflow. So to show you what it means by AI-aided design, I recently came across this very interesting video that I wish to share. So what he's doing, I think is operating on the Photoshop platform. He inserted 2 different kind of characters here, and he just draw in 2 arrows and basically just employed some of the so-called AI-related tools and prompted it with some kind of generative prompt. And you can see just within 1 click, the 2 people was essentially just inserted into the video. Same thing now, he wants to improve the so-called, photo or some sort of a destination. He puts in the prompt again, and within a blink of an eye, I'm using Gemini 2.5 Nano Banana. You can see that this person is there. And of course, you can play off some videos and giving it some guidance. It's really, really quite incredible. I was really quite impressed and quite taken aback. So I believe impressed in the sense that, wow, damn, AI has really progressed so much. But also taken aback because I wonder how does it configure the entire design industry. Now, after giving you so much context, I think it boils down to just one consideration of whether Adobe will continue to be such a great compounder, or would it end up being a Thanksgiving turkey? And for those of you who don't know the story, or at least the joke here, is that when you map out the graph of the turkey's well-being over a span of say 2 to 3 years, it will tend to compound 45 degrees to the right, and it's growing at a very, very healthy clip. However, on Thanksgiving Day, suddenly, surprise, every assumption that you have put in previously into your model is essentially negated because it just basically crashes down to 0. So I think in the short term, Adobe can really only keep up its growth via 2 ways. Firstly, you can keep increasing prices. They are basically just lifting their subscription fees year on year on a 10% clip, and that's how you recognize that revenue growth rate 10% year on year, as long as, or assuming that the user installed base is the same. So with the same base moving out, there is very little or close to no churn. You increase the revenue subscription by 10%, revenue grow by 10%. Or the second way is into having more seats. Meaning to say more people are taking up, so-called, whether is it on an individual basis or on an enterprise level. If they need to have more workflows, they need to invite more designers, then you'll also see that organic revenue growth rate. Adobe doesn't really reveal in terms of their creative cloud paid seats. And what I did was to kind of ask ChatGPT to kind of triangulate some data points into seeing where is the growth at. So ChatGPT actually churned out based on the last so-called 12 years, and this was their best guess. So in 2013, they roughly had 1 million paid subscribers to the Creative Cloud Enterprise. Moving on to 2015, they had roughly 5 million to 12 million to 20 million. And last year, they roughly clocked 33 to 37 million. Most compilers, which is third-party sources, are still talking about roughly 33 million. So what you can see, I think two things come to mind. Firstly, there was really an exponential growth rate in the earlier part of Adobe's growth. And henceforth, when you look at the earlier part of, say, the 2010s or even up until the 2020, early 2020, Adobe was really experiencing this huge dividends of growth. Not only are they growing in terms of prices, they are also growing in terms of users. So that's a twin engine. And when you see this too, when you increase price and you have more seats, clearly revenue growth rate is going to be in a healthy 20 plus odd percent margin with some change. However, if the number of seats or the number of requirements for designers actually pull back significantly or even just stagnate, actually stagnate is considered the better case scenario, because if they can continuously provide value and to increase their pricing, clearly the revenue will still go up. But now the bigger problem is looking out into the future, the next 3, 5, 10 years, would this number of paid seats actually go down? And if they do go down, regardless of whether you increase prices or not, depending on where is the rate of change, who is going to do faster? Is Adobe going to increase price a lot faster? Maybe last year they increased by 10%. Next year, in order to combat this sort of decrease in paid seats, they increase their prices by 15, 20%. I think sooner or later, it will catch up to a certain breaking point where enterprises will start kind of reducing the number of seats and in fact even pivot over to different alternatives. But I think in the longer term, however, especially for investors that want to hold Adobe for the long term, the question you need to ask yourself is that will the usage of their software become inevitably obsolete, which is like this Thanksgiving turkey right here. And to add fuel to the fire, because of the abysmal performance of Adobe, there are many trending topics of how people has been constantly bashing the company itself, talking about the rise and fall, the downfall has started, and why millions of people are deleting Adobe. And truth be told, even based on my very private conversations with so-called designer friends or friends in the industry, actually many of them do prefer alternatives or actually don't necessarily love the platform, or they do have a love and hate relationship with the platform. But a very big but again is that they really had no choice. Everything is already built on there. Their entire skill set and career is built on it. And people are also constantly on the lookout for this sort of skill sets. So it's really kind of like a chicken and egg problem where Adobe has successfully already carved out a monopoly position in these areas. I think I can understand why on one hand, investors will stay away from this name. Because first and foremost, the brand doesn't have the best of reputations. Users are stuck because they have no choice. And depending on whether you see that as some sort of a red flag or it's economic mode. Secondly, there are also very real competitive and disruption risks, especially when you think about terminal value. So once the turkey gets close to Thanksgiving or even Christmas, all the DCF arguments don't matter. And of course, many investors naturally just tend towards, I'm just throwing Adobe into the too hard pile. I don't know how to make an assessment of that. At the same time, I think there are also many investors on the other hand that are interested in this name. So for one, I think there are many theories or bear cases that will take time, whatever that we have discussed in the earlier part of the presentation. And in fact, a very long time for it to play out. And it's not as if we will immediately see a drop from 30 over million paying customers to 0 the next day. So now I think the consideration here is, what is your base case? Do you fundamentally believe that Adobe's software will be made obsolete in the long term? If it's not, meaning to say if all these people continue to stay on the platform, how much of these 30 odd million customers are the enterprise customers that wouldn't switch out, and how much of it would? And if there is some sort of a tapering off or drop off, then how do you do your assessment or how do you make that growth rate assumption moving forward from here? And also maybe to kind of like add in a bit more color to kind of argue for the bulls. In fact, if you take a different approach, with the advent of AI generated content and more importantly, improving by the day, there is a need for even more designers and even more demand for high quality designers to fix them. In fact, it might drown them in even more design related work, a little bit like the era of social media, henceforth the need for designing skills and people just generally requiring more expertise. So also, as AI generated content continues to improve, the volume of the assets a brand can churn really starts to go exponential. And someone still has to curate, has to fix, and has to adapt off the flood of images and videos being generated. And that's not really a Canva related kind of job scope with a click of a button, but it really requires higher order thinking and higher level of skill set. So now, this is of course the story side of things. How would it play out in actual numbers? I think we need time to tell. The baseline that we cannot run away from is that Adobe is indeed facing a very big perception problem today, and the slowing growth that they're seeing in the latest few quarters definitely don't help its story. So for myself, if you were to ask my ultimate opinion and take, I personally sit somewhere in between. I don't think that Adobe is just doomed for failure, but yeah, at the same time, I'm not extremely bullish about Adobe being able to eclipse all these concerns. But I personally do sit closer towards the fears around Adobe today being slightly overblown. And it could be a rather profitable idea once there is much more clarity. And the more important thing here is about position sizing. I definitely wouldn't bet the farm on Adobe, but that said, I do believe that at current valuations, they do offer a pretty interesting risk-reward opportunity. And considering all the different bear cases being thrown at Adobe today, and they still continue to much higher in terms of their growth rates, I'm probably expecting that the market is trying to price in certain levels of stagnation or even deterioration. But who knows? I think this goes under the bucket of wait and see. So with that in mind, I hope you enjoyed this discussion. Feel free to leave in the comments below on what you think of Adobe, and I'll see you in the next video. But more importantly, and hopefully, I'll see you guys on the moon. Goodbye!